Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, February 16th, 5:25 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see over here on the upper right in the trend gauge, market leaders acting fine. Gave back some of recent gains today on a late swoon in the market, but can't just change the arrow on one day's bad reaction. However, 2 days is a pattern, 3 days is a trend, and we're ever vigilant for these turns in the market because after putting up a good fight the last couple of days, the market broke back below 4,100 today. That's been a key level. So we'll be quick to go from our positive posture to a negative posture, and that's why we track the market across 3 time frames. Our first shot across the bow is always a break below the 21. We're safely above that now. Uh, not safely. We're pulling back closer to it. We've been 20 days above it on the S&P, and today's close was as close to the 21 as we've been during those 20 days. But we are still above it on all 5 indexes. Also above the 50-day moving average. That's our medium-term index. One caveat: the Dow did have one close below the 21 today. And long-term, the slopes of the lines are flattening out. We're still showing neutral long-term because although we're above the 200-day moving average, as long as that line is flat or trending lower, it's just not as supportive of the market. History shows that you really need to get that slope of the line to turn back up. So what happened today? Well, we started off really badly. PPI PPI. This is producer price index. So basically inflation at the producer level, and then producers determine if they're going to pass it on to consumers, and then if they do, it ends up showing up in the CPI, or the consumer price index. PPI inflation higher than expected. Definitely not a good read, and we definitely sold off hard pre-market, gapping down 1.2% on the S&P, 1.4% on the NASDAQ 100. But the lows were put in pretty quickly, and we started to recover, and leading stocks weren't getting hit at all. In fact, they put in their bottoms within the first 10 minutes, and we were seeing hammers all over the place. Hammers meaning you're at the top of your range for the day, and you've got a long wick that reflects the percent that you've traversed higher from the open. Shortly after the open, ARK-K, which is one of our G6 components and a good risk on, risk off signal for the market, uh, started slowly coming off, and then it shortly turned green, and that reflected what leading stocks were doing. We saw some gaps up from yesterday and today that continued to show strength, and the market was recovering nicely, got within from a 1.2 gap down to 0.2% from the flat line, and then shortly after 3 o'clock, noted Fed hawk Bullard. He's not a voting member, but his opinion carries a lot of weight. He came out very hawkish, saying we're going to be seeing this inflation for a while, and interest rates will be high for a while, and the market needs to realize that. And the market just rolled over very quickly, like a dog giving it up in a fight, just rolled onto its back and sold off hard, and all bids disappeared. Any of the recovery that we had during the day immediately, like within 30 minutes, was given up. A couple of weak, lame attempts at a bounce, but then a close at the low of the day. And this was accompanied by leading stocks that had recovered a bunch of their gains, giving back a good bit of that. So all in all, certainly not a good day for the market. As much as yesterday was a good day, where we started at the low and recovered and closed with the recovery actually up on the day yesterday. Today, we were looking at a win for the bulls, even if we closed, slightly negative. because of how much ground was recovered, but uh, it was definitely an escalator up, elevator down day for the market. That's not good, but it's one day. We don't panic over one day, but we do keep our stops in place. We keep our cost basis for every position front and center. We know how much our drawdowns are. We got our stops in place, and we've got a certain comfort knowing that if X happens, we will do Y, and that will result in Z. And that's just the process, and part of the process is surviving days like this, getting a read on the market and the individual holdings that we have, seeing what's strong, what's weak, and overall what's the tone of the market. And that last 30 minutes was not a good tone at all after really a good recovery day on Wednesday and a good recovery for most of the day today. This late selling was not what the bulls certainly wanted to see. Still above the 21 on 4 of the 5 indexes, but below that key 4100 level. The next level down is 4050. We need to hold that, or we'll be reducing additional exposure very quickly. It's a couple of clicks of a mouse to reduce our exposure. So G6 down 1.6%, S&P down 1.38, NASDAQ 100 down 1.9, Dow down 1.26. Midcaps led all day, ended up down 0.7. Russell 2000 was strong, also ended up, but gave it up by the end, down 1%. Global 60/40 down 0.71, in-house GROTECTION down 1.13%. This is kind of a victory. Losing less when we had more than market exposure. It means that the individual positions that we're in held up better than the overall market. We did add some exposure today and then took some off on the severity of that last sell off in the last 30 minutes and the complete lack of bid. So basically, we got our exposure back to where we began the day, and I'll go over that when we hit the tail of the tape. So let's dive into it. Uh, as usual, start off with a chart of the S&P 500, and except that's not the S&P 500. This is the S&P 500, and explain quickly what we do at Revere is when the markets are trending above all their moving averages, as they are here, uh, we have as much in the market as we're comfortable. Coming out of a bear market and with the macro headwinds that the market has, we got up to the highest exposure that we've had today in over a year. That was 1.35. By the end of the day, cut back to 1.23. But um, as long as we hold above the 21, we'll have a certain exposure level. If that breaks below, we'll ratchet that down and look to the next level of support, which is 40/50, and then 4,000 and the 50-day moving average, and then finally the 200-day moving average. And the 200-day moving average, why do we talk about it all the time? Because this is where all bear markets take place. We've had a very nice run off the lows, but if we get back below the 200-day moving average, we're again at risk for a bearish experience in the market, very similar to what happened January to October of 2022. Max loss was 27.5%. We've recovered a decent amount off of that. Do need to get back to 38% to get back to even. We were about halfway there. And still giving the market the benefit of the doubt, we haven't broken down. We're going sideways, and relative to where we came off the lows around 37.64, sitting at 40.90, where we haven't retraced enough to sound the alarm. But we will absolutely increase our defensiveness if we start breaking the moving averages. And again, being defensive is our number one job here. You need to absolutely avoid these big drawdowns. If you're approaching retirement, our loss was less than half of the market's loss at its worst last year. And if you're interested in this approach, if you've got some nice recovery coming off of the bottom, but you don't know if it's going to hold, and honestly, nobody knows if it's going to hold. The market has shown some resilience in the face of stronger economic data and some hope for a cease in interest rate rises, but lately the data has pointed to higher for longer. The market's still holding up, but uh, like I said, we take our cues from the market, and holding up yesterday or holding up last week doesn't necessarily mean we're going to hold up tomorrow or next week. So we've got our plan laid out in either case. And if you're interested in this approach, which takes a defensive posture when required, offensive posture when the market's healthy, reach out to me or my partner Dan. So either Dan or Don at revereasset.com, or the phone is 855 Real Wealth. That's 855 732 5932. We've been getting a lot of calls lately, and keep them coming. We learn from a lot of clients that talk to other advisors. They never talk about downside protection. They talk about, well, the market returns an average of 8 to 9% every year, blah, 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 blah. No protection at all for these big down moves in the market. All they do is just plan, if you have the lifespan of an oak tree or a California redwood and know that you'll eventually recover, and it's just a blip. And it is just a blip if you're in your 20s or your 30s. If you're near retirement, your entire nest egg is at risk if the market takes a big move down. So safety first, as Dora the Explorer said to my kids 20 years ago and says to my grandkids now. So here's the S&P 500. Let's bring up a 5-minute chart, and I can point out, here's the gap down yesterday, great recovery into the close, finished positive. Gap down again today, even lower, great recovery. Halfway there, pull back again, trying to make a higher high. Uh, nice day, nice recovery. No, here's Bullard breaking 41.30, and then it was just a waterfall into the close. Very ugly last hour. Um, didn't like seeing that. We took some new positions. We're slightly underwater in those. Those will be the first thing that get jettisoned as we keep our cost basis in mind always for everything that we own. And let's blow it out to the daily chart here. I had been drawing this bull flag that we've been trying to break out of. Um, Basically here, and it looked like we were trying to break out of it uh, with a close above it yesterday. Tried to break out of it the day before, closed back inside it, but really we're back inside of it again today. Um, and the next level down, the key level, is the 21-day moving average. And basically we need to hold that, or we're at risk of losing more in the market. And again, maybe just a couple percent pullback is what we're due for. Really seems like we're range bound between 4,000 and 4,200 while the market figures out what the right multiple is, what the interest rates are going to be. We're pricing in, the market is pricing in longer, as I said, with rates longer for higher now, 325 basis points rises. In fact, Bullard, one of the things that really spooked the market is that he voted for 50 at the last market, the FOMC meeting. And it, it just spooked the market, plain and simple. Maybe tomorrow we'll forget about it. The market will forget about it. Maybe tomorrow it won't. Again, strong economic data coming in that's supporting this more hawkishness from the Fed. Uh, but on the other hand, retail sales strong, so the consumer's holding up. Um, Crosswinds, a lot of crosswinds. So this is why we've been limiting our exposure. And as I said, we got the highest that we were today with the recovery, and more great buy points for leading stocks coming to us. But that 30-minute move down was certainly not what we wanted to see. But like I said, we've got if then else scenarios for uh, every occurrence in the market. It's just a matter of executing the plan. Here's the Nasdaq 100. Nice move up, one day down, close below the ADMA, also close below the 8 on the S&P 500. These stochastics are now neutral at best with the hook over today. The reason why it doesn't take much for it to hook over is because it's a 14-day look back period. And when you're consistent with what has happened over the last 14 days, a move in the other direction is quick to move the line down, and then it's smoothed by the dark blue line. That's the moving average. But again, closing at the lows today. Dow Jones Industrial Average, weakest of the indexes lately, close below the 21 today. Its 50-day is rolling over slightly, not showing any relative strength, even though today you would think a defensive index should, but down 1.3%. Some of the heavily weighted stocks at the top of the index, because it's a price weighted index, are just underperforming, and that's really the explanation for why the Dow is doing what it's doing. Just like when it had its big run late last year, it was because the high price stocks in there were outperforming. Here's mid caps. This is the strongest of the indexes, still above the ADMA. Um, Healthiest stochastic of the indexes, still trending up nicely, showing relative strength. If they all look like this one, there wouldn't be much cause for concern at all. IWM, we're really everything is a cause for concern for us. Every day we question every holding that we have. Is it acting correctly? Are we giving it enough room? Is it underperforming? Are other stocks? Is there sector rotation? So, we've always got our eye out and our ear to the ground for changes in the market. Here's small cap index basically closed right on the ADMA. 21 still riding higher. We expect it to do what we did right here. Let me get back to tracking price on, this bounce off the 21. Normally you get a couple of them, but it doesn't happen forever. Sometimes you just are going to roll over, take a little bit of a rest, and it's time to reduce exposure during that rest period, at least from an index standpoint, and then you let the individual holdings stand on their own, because leaders should outperform while the market is pulling back. So those are the major indexes. The equal weights slightly outperformed. The equal weight indexes, RSP and QQEW, slightly outperformed their market cap counterparts. Let's look at the dollar making another higher high. Now, this was interesting. The dollar gapped up, corresponding with the gap down in the markets, and then it was selling off pretty much all day, and this corresponded with the recovery in the markets. So the inverse correlation with the dollar and markets very much intact. And then there's the 3 o'clock Bullard spike, and it went higher sideways into the close, but got back to flat on the day, ended up 0.14%. Let's look at the VIX. VIX showed some fear today, uh, back above the 21. 50-day is starting to flatten out. Definitely something we need to pay attention to. And look at the 5-minute spike on this from 1850 up above 20 just in the last hour. So Bullard, he carried a lot of weight, what he said. Like I said, he's not a voting member. He's a noted hawk. But he spoke and the market reacted. I think there were 4 speakers today, and the other ones really didn't have any impact on the market whatsoever, even though the message is pretty much leaning toward the hawkish side with the positive economic data that's been coming out lately. Let's flip to bonds. We'll start off with the broad bond index, BND, down on the day, continuing to trend lower since this employment report on 2/2, uh, uh, or on 2/3, the employment report, and just been trending lower ever since then. Lower on the price means higher on the yield, of course. LQD, same thing. These are corporate bonds trending lower. Junk bonds gapping down and closing at the low. TLT, the 30-year, got hit the worst, down 1.42%. So bond prices down across the board. You know what that means. We're going to see yields up. And there's the 10-year making a higher high, strong trend above the 10 or the ADMA, and the 30 years TYX, strong trend, higher high. We are benefiting from this because we're in TBT, and it continues to track the ADMA higher along with interest rates. So, how did gold and silver fare today? They were positive for most of the day, bucking the trend, but gave some of it up. Let's take a look on the 5-minute chart here. And you'll see started off down. As the dollar came off, it got stronger. And then as the dollar got strong at the end of the day, it gave it up. They continue to be weak, below all the key moving averages except for the 200-day. That's gold. How about gold stocks? GDX. Same thing, actually bounced at the 200 and finished near the high of the range of the day. So a better recovery for gold stocks versus the dollar. Let's see if this can hold the 200-day moving average. I'm going to put an alert right there. While we're here, okay, so those are the major. How about Bitcoin? This has been risk on, risk off lately. It was rallying early in the day. Gave it up toward the end, not as much as the indexes, still finished up on the day by 1.8%. After hours, one of the scam coins that got destroyed, the guy was charged with fraud. That's the Terra Luna situation. A lot of people knew that was coming. So that's the major indexes. Let's go to the tail of the tape, and then we'll look at some individual names. Might go a little bit longer here tonight. VIX, that big move up 11% above the 21. The stochastics flipping back and forth between negative, positive, and neutral over the last week. So here's the PPI numbers, up 0.7 versus 0.4 expected, up 6% year over year versus 5.4%. Biggest rise since June. I think that's really what scared everybody pre-market. Then we clawed back, and at 3 o'clock, Bullard. It's going to be a long battle. That's what the market didn't like. I think I got a typo here on the 21-day. Yeah, it's day 20, not day 29. No. It's day 20 on the 21, day 29 since the follow-through day on 1/6. Our day count went to down 1 today, ADMA, one close below that, to my expectation coming in positive as long as we were above 4101. We undercut it again, recovered again, but then gave it up late in the day. And what I didn't like is late in the day, several times that last uh, half hour, we tried to get back above 4101, and when it was rejected there and went lower, rejected a couple times trying to get back above it. So we don't want to see 4101 flip from support to resistance, because that then we just have to look at our next level down, and our next level down is the 21 EMA, which is now at 4077. So we've got 4077 and then the 4050 level that has been a support area also. So negative, I'll have neutral expectations coming in to tomorrow until we get back above 4101. So what do we do in-house today? We'll talk about these, but the bottom line for the day, PPI gap down, nice recovery. Bullard speaking at 3 o'clock, negative reversal to close at the low of the day, broke below that 4101. Not a good day. We'll see what tomorrow brings. And as I said, have your plan ready for everything. So first, let's start off with the changes to the portfolio today. We bought a starter in ANET. Great reaction to earnings, consolidated it for a day, consolidated for a second day, got back above the pivot after the washout. We took a small position in this today, a 2% starter, and it's actually still positive, held up pretty well. We also bought net. I know this is extended, a small 1% position. Stop on the ADMA for this. And the strength and the volume that's been in this since its earnings report made me loosen the parameters a tiny bit just by taking a 1% position, but willing to give this one a little bit of room with a position that small. The ADMA will come up close to it within 2 days. What else did we do? We added ON as this pulled back on lighter volume, sold off into the close, still holding the ADMA. We added the GFS as it broke above our pyramid point. We have pyramid levels at 1/4%, a third percent, and a 0.5% of an ATR. We want to get in as quick as possible, especially when you've got a stage one breakout. We want to get as much of our money in as quick as possible because it's such a low risk, high reward scenario when you're right at the pivot and it's a stage one base. So we added to that today and also added to big new liquid leader A, B, and B, which was acting fantastic. Look at the volume patterns on this again, 200% institutions piling into this, but it's not totally bulletproof. You can see it selling off into the close along with the market. So we've got a 7% position in that now. It's our largest position. ARC, market giveth, the market taketh away. We booked our small gain on this, gain of about 3%, but the percent a gain was way more than what the market was doing at the time from when we bought it to when we sold it. So a big gain versus the market performance. And then when it came back to the ADMA, we wanted to lock it in. It could easily wake up to a gap down of 4% on this tomorrow. So we booked it and we trimmed Boeing. This stock is just getting on my nerves. Another failed breakout where we took it from 4% to 6%. Yeah, low volume the last 2 days on the pullback, but not showing relative strength that we need our stocks to show. Realistically, I shouldn't have bought it because relative strength wasn't confirmed on the breakout, and the volume was just so heavy yesterday morning that I added to it, but it burned me again. Still holding the 21, we still have 3% size on Boeing. So those are the portfolio changes. Let's take a look at a couple more charts today. Former broken leaders continue to come back to life. Roku. So what's happening is their valuations, or even if they're not making money, their price to sale has gotten a lot more in line with what's realistic than when they were trading at these ridiculous levels. Like this was a $500 stock. Uh, Big gap up, big volume. Uh, and great story going forward to reclaim the 200-day moving average. We insist on that, but again, still up 11% on the day, but gave up a lot toward the end of the day, and the volume was huge, up plus 500. So it was very quickly being accumulated, but uh, did run into this 80 as a resistance area here from the left side of the chart. So Roku had a good day. Another one, former leader, trying to make a comeback. Twilio, but note 80, again, resistance just back to November. Was acting well, still 500% volume, up 14% despite a negative reversal, and did reclaim the 200-day moving average. So these two will be a pretty good judge and see if they just completely break below the 200-day moving average, and was it just short covering. But this volume signature has been very common. It's Kathy Woods type stocks. They had a decent run over the last week. She's having a decent year to date. um, Twilio and Roku are two of her holdings, and good days today. But by the end of the day, Tesla had a big negative reversal. So Tesla did a recall. For Tesla, a recall in this case is just a software update. So, but the market was jittery. The market just started selling it off on heavy volume. We still have a small position in this. We always want our last sell to be a defensive sell below the 21. Um, didn't handle this well. Should have had a bigger position while it was going up, and it just moved so quickly a couple of these days. Plus, the market was still kind of iffy in its early stages. You had resistance here. Uh, Lots of factors going into it, but this was sold hard toward the end today. It's also close to the 200-day moving average, very close to tagging its 40-week moving average, and this negative reversal. So basically, they said their full self-driving FSD had a software bug, and they admitted that it could cause crashes. But they've got the bug ready, and or the bug fix ready, and they're going to update it, push it to to their cars. That simple. Is it that simple? I don't know. FSD is a big controversy. A lot of people saying they wouldn't uh, be caught behind a Tesla using FSD. Um, other people say, it's as safe can be, and it's actually safer than if you were controlling the car by yourself. But when you turn it over, people know that humans are infallible. They expect machines not to be, and machines aren't going to be 100% perfect either, especially when you're talking about all the variables of self-driving cars. And so two that didn't work today on earnings, Shopify gap down 15.8%. This basically undid all of the nice gains that it had since the beginning of the year, breaking the 21 on big volume. And another one, Toast, weird name. It's similar to Square. It's for restaurants, and it's manages all their operations. And a lot of people talking it up, and it had a great run since the beginning of the year, and that great run resulted in a 23% loss today on 646% volume. This was another one, clean breakout, back tested on lower volume, made higher highs, was looking good. No reason not to hold it into earnings, but you always got to size accordingly by looking at what's the expected move, take it by, multiply it by two, because it's very frequent that you'll get two times to the downside. I'm pretty sure this did today. And then the rule that we use is we don't want to lose more than 1% of the total portfolio on a earnings blow up like this. So that's how we size into earnings if we have something that has a gain. um, and not a good day for Toast. Let's see, are there any other charts I want to show? No, I think that is going to wrap it. So as always, like your feedback. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Went a little bit longer than I've been wanting to today on these weekly videos, but a lot of things moving today and a lot of recent good action undone in 30 minutes, 45 minutes. Don't like to see that. But realistically, we're just still consolidating in this flag from a move up off the low. Consolidation should result in a move to the upside. Tried to break out of the bull flag the last 2 days, back inside the bull flag today. So a failed breakout. Now we don't want that to turn into a total breakdown. So we're keeping an eye on everything as always. Uh, there's our email address if you have any comments, questions, or complaints. So remember, it's not how much you make in the market, it's how much of that you can keep. We lived by that mantra in 2022. Gains have been tough coming year to date. It's always been a 2 steps up, 1.5 step back situation. Now we took 2 steps up and we're just treading water, going sideways for the last 2 weeks. We need to see which way this resolves. You don't stay above the 21 forever, and we've got more headwinds now than we had back at the beginning of January. So cross currents that we're prepared for either scenario. And with that, I will wrap up Thursday, February 16th. This is Don Vandenbord with Just the Facts. They're not always good news, but they are facts. If you question them, let me know. We'll discuss it. Thanks for listening and have a great day.